What is going on, everybody? It is your boy Stas here. Welcome back to another video. So check it out. It's about 2:45 p.m. on the East Coast right now, and the markets are ripping. We have the Russell up almost 3%, NASDAQ and the S&P and the Dow, all of them, funny enough, are up 1.5% each, as the VIX is down 5%. So we got to break down the markets in this video, talk stocks, charts, what I'm doing. So sit back, relax, take a sip of your coffee, get your 15 stocks from Moomoo and your 12 stocks from Webull, linked right down below, free money. And with that being said, let's dive into the video. So we're about almost into power hour, guys. Again, it's about 2:45, almost at 3 p.m. If you guys didn't know what power hour is, it is the last hour of the trading day. If you're on the East Coast, it's from 3 to 4 p.m., right? That's the last hour of the trading day, and we're almost there. And you guys can see we are ripping on the intraday chart. SPY was at pre-market 358. Now it's at 369. In other words, it is up about almost 3% in that time period. And mind you, 358 was that low from the pre-market. And triple Q, if I pull it up, let's see. Triple Q, this thing is up from 269 pre-market to now almost 280, guys. It's at 278.50. In other words, on a percentage basis, it is up 3.3%. So I know what you're thinking. Stas, are the markets reversing? Well, the truth is, guys, and you probably know this is not a full-on reversal. Great. We're seeing some green, but it's not a legitimate reversal quite yet, because on the 20-day chart, SPY, or this is triple Q, but SPY as well, same crap. They're still, both of these are still under the 180 SMA. Not only that on the 20-day chart, but you can see triple Q's under the lows still from yesterday. Guys. And if you all remember, I mentioned this in my my other video from today. These two indexes, well, I guess ETFs, in this case, triple Q and SPY, but they track indexes, right? Both of these hit fresh lows in the pre-market. So this, if anything, it's a textbook relief rally, I guess you can say, and a bull trap. You know, we're still in this downtrend, and again, triple Q's not even out of the highs from yesterday, guys, and the day before. I mean, come on. This is not a legitimate reversal, not even close to one quite yet. And SPY, you can see the same thing. Let's pull it up. Yeah, look at that. SPY's still under the 180 SMA on the 20-day chart, right? Obviously. And it's fighting, it's struggling at the highs from yesterday, being about 369, more like 370. You know, we're pretty much right at 370, a little bit under that right now. And, you know, selling pressure is kicking in. If you guys look at the 1 day, 1 minute intraday chart, in other words, what do we have here, guys? We have a little bit of a head and shoulders kind of forming. Don't you guys see that? Left shoulder, head, right shoulder. We're looking a little bit toppy here, but at the same time, I guess you can argue we are riding the moving averages here. Currently, we're above both the 50 and the 180 on the intraday on SPY, but we'll see. We'll see. Time will tell, guys. Overall, just know 370 is a big resistance coming up on SPY and triple Q. Both of these, they're at, you know, big sticking points. So what do you think? Let me know your thoughts down below in the comments. Those are some quick thoughts on what I'm seeing right now. It's great. We're seeing some green, which is awesome, but it's nothing that you should be partying about, dancing about, getting too excited about, because obviously the bears are still in charge. And we'll see. Maybe this relief rally continues for a little bit. Even if it did, even if it ran up another 5%, 10% even, maybe not 10%, but for sure 5%, bears would still be in charge, even if this thing ran up 5% from where we are right now. So quick look at the VIX. Let's pull it up. VIX is right around 30 right now. It looks like it hit 35 was that yesterday? I think it peaked at 35 roughly yesterday, and it looks like in the pre-market today, and it's down to about 30. And who knows? Is this the peak for the VIX? I don't think it is quite yet, personally, at least based on what I'm seeing right now. Maybe in a couple of days we'll see, you know, different charts. The technicals will be showing us different things. Maybe I'll change my mind, but based on what I'm seeing now, I feel like the VIX might have a little bit more upside to go. It's at 30. It might be going back to the mid-30s. It might even go a little bit higher than that. I don't think the selling quite yet is over. I could be wrong, but in the very short term here, I feel like this could be a bull trap. We got the relief rally that I was calling out yesterday. Now we got to be careful. We'll see. Time will tell. So, yeah, I mean, VIX is right around 30. Metals are metals are moving today. Holy crap. Silver's up 3%. Gold's up 2%. Bitcoin and Ethereum, make sure to subscribe. We'll talk about those later in my next video. But I don't know what those are doing, but I'm assuming they're moving up as well. I'm just going to throw a guess out there, guys. So, interesting interesting day as I'm choking on my words here. Cheers, by the way. Got a little ice in my mouth. Crap, I hate when that happens. Yeah. Interesting day, guys. So let me know your thoughts in the comments. And now we're going to talk about some stocks. And I also have some subscriber request stocks. And by the way, if you want me to talk about any stocks, you watching, the subscribers out there watching, I appreciate you guys. As always, if you want me to cover any stocks, drop them in the comments, the ticker symbols, the company names, whatever. Drop them down below, and I'll cover them in these videos. So DraftKings is number one from the subscriber requests. This is ticker symbol DKNG. And by the way, if you're finding value in this video, guys, feel free to hit that like button and subscribe. It really helps me out overall in the algorithm. So you guys know football season's here. We all probably know that. NFL starting. And what does NFL promote, really? You know, a lot of companies are promoting gambling on the games, you know, doing parlays, money lines, or whatever, right? I used to do a little bit of sports gambling, nothing much at all, really, to be honest. About a year ago, I threw $100 on DraftKings, and it took me, I was surprised actually, it took me about a month to lose all the money, and I didn't put any other money in. I just threw the 100 in, and I was like, screw it. I'm going to see how far I can take this. I think it was actually around the last Super Bowl, so almost a year ago, and yeah, it took me about a month to lose all my money. I was making money a little bit, losing money. Then I went big on a parlay. You guys know how that goes. Boom, lost all the money from there. So what's going on right now? We're getting a lot of promotion for DraftKings, right? So maybe in the next couple of quarters, I would not be surprised if we did see a resurgence in their earnings. They're still going to be unprofitable from what I've been seeing, but maybe not even a resurgence in their earnings, but maybe we start to see revenue kick up a little bit. And you guys know companies like DraftKings, they spend a ridiculous amount of money on marketing, commercials, everything you're seeing when you're watching football. I mean, how many times are you seeing commercials about this crap? Every freaking 5-10 minutes. So you know they're spending a lot of money. Let's see if this converts to new customers and if those customers actually stick to the platform. And that's what I've noticed with a lot of these betting apps, companies, whatever you want to call them. People are bouncing from app to app. People are going to whatever app is offering, the best deal that day. I mean, when I was on these apps, and again, I'm not a gambler by any stretch of the imagination, guys. I freaking hate gambling, but I wanted to try it out. I wanted to see what all the hype was about. I wanted to learn and get my hands dirty. That's how I am. I learn hands-on. I can't just learn from somebody being like, oh yeah, that's how it happens. I got to actually do it. So again, I put $100 into DraftKings. I downloaded FanDuel. I didn't put any money in FanDuel. Maybe I did 25, but that was, maybe a couple years prior. So I've had experience with these, and I know my friends, some of my buddies, you know how that goes. A lot of them are into sports gambling, right? Sports betting. And they tell me all the time, there's a promo on this app, promo on that app. If you sign up and bet this, you get $25 to bet for free. They're trying to get you to get on the app, right? So that's what they're competing with. It's a very competitive space. So for me, I was in DraftKings, and that's a big reason why I actually got out of it. I realized this, and I'm like, I just completely, got into a crappy investment. In my opinion, I don't want to say it's a crappy company, but for me, it's just too much competition. They're losing so much money on marketing, and it's just there's other places I'd rather put my money. So, I was in DraftKings, and I've mentioned this before. I took a loss on it, tax loss harvesting. That's what I'm doing with the loss. And at this point, looking at it as a trade, looking at the technicals, it doesn't look all too bad. And again, we're in football season. These next couple of quarters, we might see a kick up in revenue. Maybe their losses slim a little bit. I don't know. We'll see. And maybe that caused the stock to move up. So in the short term, maybe it could be a trade. But as a long-term investment, again, like I mentioned, all the reasons I mentioned, I don't really like it. Too competitive. They're losing a ton of money. And honestly, these customers are jumping from platform to platform too much. Maybe that's just my experience. I don't know. Maybe there are dedicated DraftKings users that only use DraftKings, but I know a lot of these younger guys, they're going where the promos are. And I know DraftKings has a ton of promos, but so do a lot of these other companies, and they're just going from platform to platform. And that's just something that I don't like, to be honest. I really don't like that. The fact that it's so competitive, people are jumping back and forth, back and forth. So we'll see. Maybe as a long-term play, I don't like it, but as a trade, hey, it looks like we're in a wedge. We're slightly under these moving averages. We have a death cross, which is not good. But if this starts breaking, let's say $18, $17.50, maybe it starts making a move there. So I'm going to set my alert at 18, and hopefully that gave you a little bit of insight on my thoughts on DraftKings. And they've changed over the past year and a half. My thoughts on DraftKings have really, really changed. And it's one of those stocks that really I should have never bought, to be honest. It's a mistake. I learned my mistake, and I'm staying away. That's just my honest opinion and just the honest truth here. So next subscriber request, Lemonade, LMND. This is another one that I didn't buy. I don't think I've ever even owned Lemonade, even as a trade. But this is one that was hype. You guys remember it. It was at $300 a share, or maybe not 300. It was at almost 200. It was at 188. Now it's at 22. It's another one of those companies that got completely obliterated. This is probably even worse than DraftKings, to be honest. But overall, in the past couple of months, and by worse I mean the performance of the stock, maybe the company, as a company, hey, maybe Lemonade is better than DraftKings fundamentally. But in terms of return, they've both been horrible. Let's just leave it at that. They've both been horrible. And right now, Lemonade technically is trying to find, it looks like it maybe has found the new bottom. I mean, this thing bottomed way before, notice, this is important, way before the S&P and the NASDAQ. They bottomed in June. You remember that? This bottomed in February, guys, about 4 months earlier. We've pretty much found this $16 to $18 bottom. And look at where we are now. We're above 22 a share. Today, right now, Lemonade is up 6%. And I feel like we could be seeing more upside here. I really do believe that short-term, technically speaking, if we start breaking above mid-20s, there's going to be a push. So I'm going to set my alert at $25 for Lemonade. Fundamentally, it might not be the best company. I'm not looking at it for the long term, but as a short-term trade, if this starts breaking 25, the moving averages, the highs from early September, we're going to get more upside. So those are 2 subscriber requests, guys. We have maybe one more to talk about, which is not a subscriber request, but I'm looking at this stock. It's moving. It is ChargePoint, CHPT. It's up 3% when I'm filming, guys, slightly under these moving averages, but there's no doubting, there's no question that it is holding the uptrend. So we're kind of at a point where it's the moment of truth. Is ChargePoint going to break out of 1650? If so, and mind you, we're at about 1570 right now. So if we start moving out of there could be a lot more upside. We're talking 18, 20, maybe even higher than that per share on ChargePoint. So with that being said, I'm going to wrap the video up, guys. If you enjoyed it, hit that like button, subscribe, and again, let me know your thoughts in the comments. And if you want me to cover any specific stock, drop me some tickers down below. And if you haven't gotten your 15 stocks for Moomoo yet, use that link, deposit at least $100, and you get 15 stocks, each up to $2,000. And you could also get 12 stocks from Webull with any amount deposited. All of those links are down below. And with that being said, cheers, guys. I will catch you in the next video. Peace out.